Welcome. Okay, now we're recording. Excellent. Um, like I said, Amanda said, my name is David Ferreira. I work at Bristol County Savings Bank as a Vice President, Small Business Relationship Manager. I entered my 30th year of banking in September of this year. I actually started with a bank called Rhode Island Hospital Trust, which several innovations later is a different bank. But my point is, I've been doing this a long time. One of the things that I love about the particular Money Smart deck that we're going to go through with banking services is it covers everything that you would need for your relationship from soup to nuts, because especially newer businesses, they always have financing on their mind, which of course is critical because you need working capital to get your business going and running efficiently. But there are also a host of other services that we're going to touch upon, banking services and how you can leverage them from your bank, how to select a bank, um, different types of financing options, because maybe a bank loan isn't what you're looking for right now. So we want to present some solutions. And also, towards the end of the presentation, something that's really on our mind a lot lately is fraud and scams. I don't think you can turn on your phone or look at the news any day without hearing about another data hack, about another data breach. And I just want to offer a few tips to keep your information safe, because you want that information accurate and clear when you're ready to apply for something. And you don't want to have somebody hack your information or open a credit card in your name that goes past due and you find out about it at the time of the application. That's not the best timing when something like that happens. So let's dive in. Next slide, Amanda. You know what? Actually, I can advance them. So I have control, so that's fine. Our agenda today is broken up into three sections. We covered the welcome. Section one is banking services and building a banking relationship. What I hope you get from this module, or the first section, is that there's so much more to a banking relationship than just applying for a loan and having a checking account. That's just the bare minimum, but there are so many other services and that you can leverage from your local bank. And it all starts with building a banking relationship. The second, we're going to cover multiple different financing options, from term loans to credit lines, business credit cards, pros and cons of grants, um, you know, loans that you would get from your family to start your business, loans from your saving. We'll cover all of that. And third, like I said, avoiding frauds and scams. As we all know, the state was just hacked this week, and it always seems to be another major company, and our data is everywhere. So the more we're able to control our data and police it by doing things like I'll cover multi-factor authentication, checking your credit reports, where you can go to check those credit reports. That'll be in section 3. And then we'll host a Q&A. As I said, one of the things I encourage you to do is, as I'm talking, because I can talk a lot, feel free to stop me, put a question in the chat, and I will answer it on the spot, because this is for you. I hope you take a lot from this, and I appreciate everybody that's joined, especially so close to Christmas. I think we're having a snowstorm tomorrow, so who knows? Maybe we'll have a white Christmas. But in any event, on to the next slide. These are some of the learning objectives that we're going to take from this presentation. And one of the main objectives is building a long-term relationship. I can't emphasize enough how critical a relationship is with your bank. Having a trusted advisor can make all the difference between having smooth business operations and not knowing your bank, not understanding the technology. And when you build a rapport or a relationship with a manager, lender, or customer service representative that knows you, you have greater access to services. And also, it has to be a bank that you like and trust. We're going to talk about factors to consider when selecting a financial institution, features and advantages and risks associated with financial products, and types of financing options and lenders. We're also going to cover the different types of financing options, because one size does not fit all. One business may need short-term working capital to support their accounts receivable. Others may need permanent working capital or an equity injection, or they need an equipment loan, or they need to buy supplies. So we're going to talk about that. Ways to become bankable and improve your chances of getting a loan. Your personal credit history and business credit history. And I'm also going to cover the 5 C's of credit. Also ways to recognize and avoid small business fraud, scams, and cybersecurity risks. But let's start with the first section. Banking services. And I can't emphasize enough building a relationship with a bank. It's a two-way street. You have to trust your banker. You have to feel comfortable. You want to evaluate, is this bank a good fit for me? Because the fit has to be mutual. So we're going to talk. All right.
Thank you.
Sorry about that. Okay, well, let's continue. You know, the first step in any type of relationship is meeting the local bank staff. Either visit them during normal working hours, or also you can schedule an appointment so you can have more one-on-one time. You want to meet the loan officer, the account and branch manager, and there are some myths about banks. That banks don't want your businesses because you're too small, when in reality, small business is not only just the lifeblood of the economy, it's also the foundation at which good banks run. We love our small business customers because, frankly, when you think about a small business, there was a time when Bill Gates and Steve Jobs started Apple and Microsoft in their garage, and now they're big businesses. So I've always been of the mindset that small business is big business. Banks don't make small loans, also another myth. Many banks, including my own bank, we have a product called an express business loan for loan requests up to $150,000 that just require a simple online application and the first page of your tax return. It's score driven. Most banks offer score driven products for small business loans, and they're very efficient. We all have the capability to do much larger loans, and they require more documentation and more underwriting, but never think that you're too small for a bank. I need a perfect credit history. Although your credit you should be aware of your credit. Your credit history doesn't have to be in the 800s. Most cutoffs are in the high 6s, and knowing your credit, especially if there's something that's inaccurate on there, and disputing it before you apply can make all the difference between an approval and a decline. Loan applications take months. Most banks that use scoring for small business loans can usually get a decision in anywhere from instantly to 24 hours, and usually funding within a week. And fees are not affordable. The fees are actually affordable. In most cases, there's just a simple application fee and then maybe a small fee once a year if you have a credit line. If you're looking at a term loan, there are no fees annually for that, just the application fee that covers the documentation, credit pulls, and things of that nature, but they are very affordable. And also, and I'll plug this in the financing section, the SBA is also waiving SBA fees, I believe, for loans up to $1 million. So there are a lot of options out there in the marketplace. What are the factors in selecting the right bank? I always say customer service. Customer service is the foundation that a good financial institution is built on. I can't emphasize this enough. When you walk in, do people greet you? Even if they have customers, is there somebody that acknowledges your presence and tells you, please have a seat, we'll be with you momentarily? Or are there no staff, nobody acknowledges you? Go with your gut feeling when you walk into the bank. How does the bank make you feel? It should be a welcoming environment. We want your business, and customer service is the key to getting that business. Also, you want to think about access to your accounts. Do you like online banking? Do you like to bank in person? Everybody banks differently. What types of technology do they have? How is their mobile app? Ask for a demonstration. Where are their ATMs? Are there ATMs in their network that other ATMs that maybe they waive the fee for if they're part of a different type of network? You see, like in drugstores sometimes, or pharmacies, they'll have little kiosk ATMs, and a lot of them are in national networks. So inquire about access points to your money. If I need to get cash, you may never need to have cash based on the type of business, but if you do, how can you safely and securely deposit that cash, and where's the nearest ATM. Also, you want to discuss specialized small business products and services. What do they have to offer for a small business? It should be much more than just a checking account. A checking account is just starting. And that's basically the foundation that a banking relationship is built on. But let's get into like the different account services that banks offer. And I'm going to touch upon every single one, because one of the things that I encourage people to think about when they're starting a business is where they want to be in a year, where they want to be in 5 years, and you follow your business life cycle. And as your business matures, you're going to have different needs for different services. You may start off very small, and in a year, you're growing like gangbusters. And you initially had a business credit card, and now you need a credit line because you're growing. So you want that financial institution to grow with you. So really, take a deep dive when you visit and ask about all their banking services. They should have marketing material and brochures that cover everything, including the following account services. Business checking accounts. There are usually at least 3 to 4 different type of business accounts based on your business. Most banks have a simple business checking account, which can offer fee-free banking. In many cases, it may just require a small minimum balance, say $200 or $300. That varies from bank to bank. You may be a very seasoned business where you have a lot of transactions, and you'd want a high volume account. And you always want to ask, what are the minimum balances to waive my fees? How many items am I allowed? If you're switching banks, it's not a bad idea to bring a bank statement with you, so the banker you're interviewing and meeting can analyze your statement and put you in the right possible account. Business checking accounts also come with business debit cards. You can request that for short-term payments or quick petty cash payments. Business debit cards have less purchase protection than business credit cards. And both have less protection than consumer cards. And I recommend, if you're going to be using a card on a regular basis, have a business credit card. And I'll get into that more as we go down this list. Everybody knows what a savings account is, but do you know what the interest rate is? Banks offer different types of savings accounts, money market vehicles, and if you have excess cash, it's always good to build up a cushion. That way, if you have an emergency, you don't have to borrow if you have the cash. And if you have surplus cash, I don't recommend keeping it all in your checking account. Open a savings or a money market. Ask what product has the best possible rate at the time. I know rates can be a moving target. Fed just lowered them yesterday. But that's always a way to keep reserve cash just in case. If you have cash longer term that you know you're not going to touch for 6 months or more, you could put that in a certificate of deposit. That CD can also be used, as well as the savings account, for collateral for a loan to secure the loan. And then most banks also offer they have wealth arms that offer retirement plans and other employee benefit accounts. One thing that all banks offer is an individual retirement account. So if you don't have a 401k yet because of the size of your company, but you want to plan for retirement, you can meet with a financial services representative and open an IRA and make deductions that way. So at least you're saving for the future. And it's always best when contemplating retirement vehicles to talk to your accountant or financial advisor. Business credit cards. I touched upon business credit cards. Although they have more purchase protection than debit cards, they have slightly less than consumer because the regulations do favor consumers. But with business credit cards, if you have employees, you can issue them a credit card and you can lower their limit. So say you have a $25,000 credit card, you can give a driver a card with a $500 limit, and you can adjust the limit for each team member on your team. That way, if they have to buy purchases on the road, gas, or you can restrict it to certain types of businesses where they can use it, so they could use it at a gas station to buy fuel. One of the best benefits of business credit cards, and most banks offer their own private label card, is you usually have 2 options. There's a cash back option, which is if you run a lot through your credit cards, you can get cash back at the end of the month, which can be reinvested in your business. And another perk, the other type of card, are travel cards that get travel rewards. And I've had many customers over the years using their business credit card for small transactions. and then realizing they have 500,000 points and they could go on a trip to Hawaii with those points. So if you're going to be using a card for a number of transactions, I recommend a business credit card over a debit card because you get more perks. And who doesn't like free travel? Now, cash management is something that a smaller business may not need initially, but as your business grows and becomes more sophisticated, cash management is a suite of online tools that allow you to generate wires from your desk, ACH payments to vendors. There's a system called Positive Pay. If you've ever been hacked, you can decide what checks are paid every morning when you log in and let the bank know which checks are good. And if you detect a check that's out of sequence that you don't recognize, you can decline to have that paid. There's a whole host of, you can have lockbox where the bank collects all your payments and opens a post office box for you. So cash management really runs the gamut. Actually, one of the favorite products of my clients in cash management is remote deposit. And that's a check scanner where instead of going to the bank, you bring the bank to your office and they can put a check scanner on your desk. And when you make your deposits, you just scan the checks in. You can also do that with a digital app. Most banks have a mobile app and allow mobile deposit. But if you're depositing small checks, that's a perfect fit for you. If you're depositing larger checks, then you're going to want to really consider maybe having a mobile deposit because there are limitations to the mobile app. Whereas with an actual desktop check scanner, you can deposit larger checks. And it really does save time. You can get the money in before your payments come out, and you can do it from the convenience of your office. Now, another thing is merchant services, credit card processing. You know, many businesses, when they first start, think that you have to be really big for credit card processing, and you can have the smallest solution possible where it's just a handheld or like a Square device. They can provide full credit card processing terminals. Most merchant service providers can even provide something like a Clover system, which is almost like a cash register that tracks ordering and tracks payments. They can work with your website to put shopping cart software in. So merchant services can actually cover small, medium, large, and very large businesses, depending upon the volume. And I've always been of the mindset, making it easy for your clients to pay and bringing in those sales. If you find that you have a lot of clients that want to pay by credit card, because consumers also like the credit card points and the cash back, your bank representative can schedule an appointment with their merchant services provider. There are also other services, money and wire services, safe deposit box services, um, different types of check styles. Most banks, if you have your own software, say QuickBooks, for instance, most banks' online banking can interface with QuickBooks, so you always know where your money is and what's coming in and what's coming out, so you can maintain. And I'm going to cover more of this when we cover the technology piece. You can maintain accurate books because one of the biggest mistakes a small business makes is they commingle their funds with their personal funds, and they should really be separate because at the end of the year, when it's time for you to file your taxes, you want to be able to maximize every deduction. And you don't want, if you have a CPA, you don't want your CPA spending hours, billable hours, trying to figure out what's a business expense and what's a personal expense. So from the get-go, out of the gate, I highly recommend a separate business account, and your personal account is just for your personal money. If you pay yourself from your business, that goes to the personal account. But everything else that's related to the business runs through that account. You have access to archived statements. You'll always have your records, copies of canceled checks. And you'll also, most importantly, every day when you open your doors, you'll know what your true cash position is for the business. And if you need to augment that with credit products, if you're having a slower month, if you're seasonal. But I highly recommend, one of the best practices is really separating business accounts and personal accounts. It makes, in the long run, it makes your life so much easier, and you really are able to tell with a snapshot, am I making money or not? Okay, cost of services and transactions. When you open a deposit account by law, you're given a disclosure that breaks out all the fees, everything from what a cashier's check fee cost, a stop payment, money and wire. Those account disclosures also contain pertinent information about funds availability. When you deposit a check, how long does that check take to clear? Is it a local check that'll take 1 or 2 days? Is it from a bank in California? It could take up to 5 days. You really want to know that when you're depositing your checks, when they will clear, especially if you need to get access to that cash quickly. So that's something that I think is really important. And the most important thing that's on the disclosure, and I encourage you to read it and also discuss it with your banker, ways to get fees waived or reduced. And in most cases, if you meet minimum balance requirements for regardless of the size checking account you have, small, medium, or large, you can avoid those monthly service fees. And also by bundling and having more products and services with a bank, you can get your fees waived in different ways. Say, for instance, if you have a check scanner or you have online banking, your monthly checking account fee is waived. Or if you have 3 direct deposit, and these are fictitious examples, every bank has, a different matrix for how they waive fees. But the more business you do with one bank, the lower your fees are going to be because you basically are building a relationship as opposed to just a transactional account. Business debit cards. They're great to have if you need to get cash, online and point of sale purchases. They do have the daily limits for security purposes and withdrawals. Most banks only allow anywhere from 500 to 1,000 to be withdrawn. For really large purchases, you may need a credit card for that. And also, there's less purchase protection with a debit card. So if you, like I said earlier in the presentation, if you feel you're going to be using a lot of cards to buy materials, to have your fleet on the road, whatever type of purchases you need to sustain your business, I highly recommend having a credit card versus the debit card because credit cards do provide more protection than debit cards. But it's also good to have a debit card for emergencies. If you need to pull out quick cash in the morning or something, you'll have access to that. So I recommend both, frankly. Savings accounts are one vehicle that we highly recommend, and CDs I really covered on already. They show that you're reserving cash, and if you have excess cash, I recommend having a savings or a money market. That way you can earn extra interest, and that extra interest can build up in your savings, or you can transfer it into your checking for ready cash. Certificates of deposit are for large lumps of money that you're not going to be touching because the CD can be anywhere from 3 months to 5 years. If you withdraw the money from the CD before its maturity, there is an interest penalty that could eat into your principal. So it's always important to know, when am I going to need that money? And if you think you're going to need it sooner than later, don't put it in a CD, put it in a money market so it's ready. But either way, with the savings or the certificate of deposit, if you're looking for a small loan and you need collateral for that loan, these can serve as collateral and that actually secure the loan. Now, cash management and merchant services we've covered upon, but I'm gonna highlight some of the key points. Talk about managing cash with your bank. How does your money come in? How fast does it go through your account? How do you take payments? Do people send you checks? Do they pay in cash? Do they ACH the money to you? There are all different options, and depending upon your needs, cash management does a lot of things, mainly keeping detailed records. If you have customers that give you checks, you can scan those checks right on your phone or with a mobile deposit scanner. Also, another feature is that cash management also provides bill pay services. So if you have vendors that you want to pay, instead of writing them a check, you can automate the payment. You can push it out automatically, or you can pay as you go. You can queue things up to be released at a later time. You can even, if you have an assistant or someone in your finance office, if your business is of that size, they can queue up these payments and you can set the controls so you have to be the approver. You can also, one of the best features of online banking and cash management is you can grant what's called secretarial access or authorized user access to your CPA or financial advisor, and they can log in and they can see your cash, they can see your bank statements, and when it's time to reconcile your books for taxes, they have ready access to that information, which saves you time and money. Increase sales by using merchant services. A lot of people, if they don't use a credit card, like to use a debit card. They like to use Apple Pay. And merchant services can provide those POS terminals that actually have tap to pay. They can be as simple as a mobile handheld that you can bring with you to trade shows, or a more complex system that has merchant services, allows you to give gift prepayment cards. You can even, a lot of merchant services providers will let you do a branded logo gift card, so you can sell gift cards during the holidays or for any occasion. And also, if you take orders online, they can work with you to actually put their solution right embedded into your shopping cart website. So they can make the purchase, it goes through, the money goes directly into your checking account. And also, merchant services have different options for when you get paid. Depending upon the pricing you agree to, you can get paid next day. Or if you don't need the money right away and you want to pay a smaller fee, maybe 2 or 3 days afterwards. So, but they can always make an appointment with you to speak to a merchant service representative that supports the bank. And they're very experienced because that's all they do. And they'll really get into the weeds with you about what type of business you have, how fast you need the money, how you get paid. And they can provide a lot of different solutions that can actually increase your revenue. To learn more, I recommend visiting the SBA.gov or FDIC Money Smart, where this presentation was created. There are a lot of different documents and playbooks and information that you can download. And it would be under the Money Smart program. It's compatible with accounting software, and it's Money Smart is for personal and business finances. And at the bank that I work at, we teach Money Smart programs because they're curated by the government. They contain a lot of information. And I know people during a presentation may not retain every single thing, but you're going to have the presentation afterwards. And also, they can share my contact information if you have questions in the future. Please feel free to reach out to me. This is an important point when we're talking about your banking services, when we're in section 1. Reconcile your accounts monthly at a minimum. In today's fraud environment, I think monthly doesn't cut it. If there's a fraudulent charge on your account, in a lot of cases we see they do a test transaction to see if it goes through before they hit your account with a big transaction. Banking today is very sophisticated. You can have a mobile app. And I recommend every morning logging in and checking the transactions that came through. Make sure you can verify them. If you see something suspicious, don't wait. Call your bank. That's very, very important. You don't want to wait until the money's gone to have to start a claim when you can actually say your debit card is compromised or your account's compromised. They can immediately freeze the account, and they can talk to you about solutions about opening a different account. Or if, say, for instance, you're a business, I've seen many businesses where somebody steals a check and then tries to create a fraudulent check. And maybe that's an account that has thousands of transactions that go through a month. And the thought of closing and opening it is just a nightmare, which it is. You can sign up for cash management services and use a service called Positive Pay, which allows you to actually log in every morning and verify the checks that you wrote. So if you see one of those out of sequence checks, you can block it. Also verify when your checks go out. Banks make mistakes. Sometimes if the check isn't legible or there's an encoding error and the software misses something, you want to make sure the check cleared for the dollar amount that you wrote it for. And then basically, also with remote deposit, you can see copies of those checks, and you can have all the reports that talk about all the different checks you deposited. So knowing what's going in and out of your account on a daily basis, I think is critical. I mean, it used to be we would encourage people to balance their checkbook monthly, but in today's day and age, with the amount of fraud that we see, and every time we think we have a handle on it, the fraudsters get ahead of us. Years ago, it used to be they'd wear pagers and they would scan your debit card and they'd capture the information that way. Now they install skimmers at grocery stores and ATMs. that look like a real ATM, and you're actually inserting the card or swiping it and giving them your information, which they sell. So knowing where your finances are on a daily basis is, I strongly recommend, because there's nothing worse than chasing after your money. It's better to protect your money before somebody tries to take over your account or gain access. Also, just to reiterate again, for financial and credit training, visit www.sba.gov or fdic.gov/MoneySmart. Now we're going to get into the financing section. This is my favorite part. We're going to cover things like financing sources, options. Are you ready for financing? One of the things that the SBA does that I love is they host lender matches throughout the year where you can meet with a host of bankers and talk about financing options. And one of the most important thing is you have a captive audience of usually a minimum of 3 to 4 banks you can spend 15, 20 minutes with and talk about the process and also determine if you're ready. Lender matches are a great way to prepare to apply for a loan. I don't recommend just approaching a bank applying for a loan unless you've done some homework, understanding what you need, understanding what your credit history is, understanding what the documents are that are required. And I'll get into that further. And especially for a new business or a startup business that needs a business plan, meeting with lenders, they can point you in the right direction so you can get assistance in preparing that business plan. Because a business plan for a startup isn't just a roadmap for how you're going to get your doors open. It also should include 2 years of financial projections, because you're projecting how that business is going to do for the next 2 years. And if you're going to be able to pay your bills, support yourself, and run your operations. Under financing readiness, I want to cover the 5 C's of credit, loan readiness checklist, and understanding the cost of financing, because there are different options for every scenario and need. They're basically broken out into five key components: savings, gifts, and informal loans. I'll start with first. Term loans and installment loans, lines of credit and credit cards, special purpose loans, usually unusual loans like for agriculture and things of that nature, and other financing options. Let's dig into the first one. Savings, gifts, and informal loans. It's the number one form of financing used by startups. The gifts can be counted as business capital. And usually these are the type of loans you borrow from family, friends, maybe an investor that wants to invest in your company. If you've ever seen the show Shark Tank, a lot of times they try to raise capital by getting an investor, and they have to, give them like 10% or 20% of their company. There's also, in addition to borrowing money from family and friends or getting an investor, many, the SBA and the SBDC can point you in the right direction, because many small community investment corporations and agencies throughout the state offer grants. And what's the best thing about a grant? It doesn't have to be paid back. So when you're starting your business from the ground up, a bank loan may not be the very first thing you look for. If you can take advantage of grant funding that you don't have to pay back, even if you think you need a bank loan, also explore grants, because it's free money. And it's just a benefit to you. I know Commerce at one point, the fund I think is depleted, but Commerce Rhode Island had startup funds up to $20,000 in grants that they could offer businesses, depending upon the type of business and what the purpose was for. But there's always funding available. And sometimes maybe you just need $5,000 to get or $2,500 to get your business going. And a lot of organizations offer micro loans. So you may not necessarily need to go to a bank for the loan initially. You can get a micro loan, but you will need a bank to open an account. Where are you going to keep your money? How are you going to get paid? How are you going to pay your bills? So that's what we covered in the first section. But just when you're thinking about financing options, one of the first and most popular for a really small startup business are grants, microloans, investments from family and friends or investors. And it's always good, in addition to building a relationship with a banker as your business grows, is to build a relationship with an accountant. They can point you in the right direction. They can give you the best tax advice also. And also they can help you prepare your tax returns so you're accurately capturing all the revenue that your business is making. Because as your business matures, if you're looking for additional financing, we're going to base a lot of our decision on what your tax returns say. Are you making money? What's your cost of goods sold? What's your gross annual revenue? So we're going to be looking at those things. So moving on from the first financing option of savings, gifts, and informal loans, term or installment loans. A term loan is basically like a car loan. It's for a set period of time, can be anywhere from 1 to 5 years, with an SBA guarantee possibly up to 10 years. It's a fixed rate for the life of the loan. And for instance, we'll use an example of you need to buy a piece of equipment. The piece of equipment is $25,000. You borrow $25,000 for 5 years. You'll have a set payment every month for the duration of that loan. Many banks, if not most, offer what I had talked about, the express business loans, 100,000 and under. Some are 150 and under, where you can apply through a portal and you can get term financing. And it's really, the purpose is for fixed assets, because your collateral will be that piece of equipment that you're purchasing. It's for a set period of time. The payments don't change. The payments are very predictable. And always know the difference between, and I'm going to cover credit lines next. For short-term money, you'll want to use a credit line. And I'll get into detail in the next slide with that. For permanent asset purchases, permanent working capital, you want a term loan. You never want to use a credit line to buy a piece of equipment, and I'll explain why. That's what a term loan is for. And term loans can be used for various purposes, from equipment, permanent working capital, software, technology, expansion, to hire. So that's a term loan. Lines of credit and credit cards. How a line of credit works, it's for short-term money. So if you had a $100,000 credit line, and you are a manufacturer and Walmart wants to buy your product, and you say to yourself, all right, how am I going to buy $50,000 worth of materials to get Walmart their money? Walmart's going to take 3 months to pay you back. How do you bridge the gap between needing short-term money to make your products and services to bring to market and also staying afloat till you get paid? You would use a revolving credit line or a working capital line. How that works is once you close on the credit line with the bank, you have it available to you, but there's no disbursement. If you have a $100,000 line, you need 20,000. You pull it off the credit line. You're only billed for interest on that balance on a monthly basis. The interest will pull from your checking account, and then when you get paid by your vendor, you pay back the principal. So it allows you to float what we call accounts receivable, the money that is owed to your business, until you actually get paid. So it differs greatly from a business credit card, because a business credit card, the interest rates are higher and usually are better for smaller purchases. But if you need accounts receivable support for working capital, I highly recommend having a working capital line, but don't use it for permanent working capital and don't use it for equipment. You need a term loan. And in some cases, a business may need both. It may need a term loan and a line of credit. Some examples below in the bullet points, they are secured. We can secure them with your accounts receivable. We can secure them with cash. We could look at business assets. They're used to finance business expenses, like I just said, your manufacturing expenses if you're a manufacturer. And credit lines are renewed on an annual basis. Term loans are not. They're for the life of the term that you signed up for. Whereas every year, credit line, there's an annual credit review and renewal based on how your business is performing, how you're paying the credit line back, and also how your personal or business credit is. The one thing to remember, most banks have what we call as a cleanup period with credit lines. To ensure they're used for short-term working capital, most banks require you to pay your line off to zero for 30 days in one calendar year. That shows and demonstrates you're using it for short-term financing. Whereas if you need long-term financing, you would want a term loan, or if you're buying real estate, a commercial real estate mortgage. So always know when you get a credit line that they're going to want to see you cycling it. You can use it, but make sure when you get paid, you pay the credit line off. And for at least 30 days in one calendar year, you try to keep it at a zero balance or as close as possible. Business credit cards, I've covered a lot. I think it's good to have a business credit card, especially if you have employees that are going to make purchases, because you can control the purchase or the purchase amount. If you had a $25,000 credit card, you may not want to give an employee their own card with that much of a limit. And most business credit cards, including ours, you're able to log into the credit card portal and set that user's limit. So you have 25, you set them to 500, and you can specify, gas stations, restaurants, or whatever. So, they don't run to Target, behind your back. It gives you a lot of purchasing control, much more than a business debit card. There is some liability that is greater with business credit cards versus consumers, because there are more consumer protections. But if you think you're going to be using credit cards on a regular basis, you could get extra cash back or travel perks. Credit cards have a grace period, so you can also pay it off every month and avoid interest. That's one of the great perks. They're usually not reported to consumer credit bureaus unless your account's delinquent. And that goes for business loans in general. Most banks will pull your personal credit to determine your credit worthiness, but they don't report those to the credit bureaus. They may report it to a business reporting credit bureau, but most banks don't report to a consumer bureau. But one of the benefits, if you have multiple employees, is you can give them purchasing power instead of loaning out your credit card, and you can control how and where they spend the money. Now, government programs for small businesses, I have to say, are fantastic. The SBA has various programs, the Express program, Express for Veterans, the 7A, the 504, depending upon the size of the loan. Currently, right now, there are no fees for an SBA guarantee, and the guarantee up to $1 million. And one of the things that you want to look for when you're shopping for a bank is, if you need a loan, there's a high probability, if you're a newer business and business less than 2 years, it'll require an SBA guarantee. You want your bank to be a preferred lender where they can automatically get an SBA approval. Preferred lenders are part of the SBA's network, where they're able to access SBA systems and actually get the approval in a very quick fashion, as opposed to manually doing it. And what SBA does is it guarantees a portion of the loan, and it allows lenders to approve loans that maybe don't have enough collateral. Maybe the business is really new. Maybe it's a riskier industry. The SBA bridges the gap between the bank's risk tolerance and the credit you need. The SBA has been a wonderful partner for us for many, many years, and I expect for many, many years to come. And they also have a microloan program, if you visit their website at sba.gov, that provides direct loans and grants to eligible nonprofit lenders. Some of the other things that SBA does, during the pandemic, when people were getting payroll protection loans, the SBA was pushing them out. When there's a natural disaster, the SBA can grant economic injury disaster loans called EIDL loans that have very low rates and very long payback periods, up to 30 years. So during the pandemic, the SBA really stepped up to the plate and really kept our economy going, frankly. So people used to historically think, oh, SBA, that's the lender of last resort. No, it's the SBA is credit enhancement that allows you to get your loans done, and no cost to you, and it's very transparent. Usually there are just a couple of extra forms you have to fill out with the bank. They transmit the request electronically through a system called E-Tran, and get your approval code, and then you're on your way. And you can stop thinking about financing and go back to running your business, because that's our goal. for you to have a successful business. Also, again, you're going to be getting this deck for the Department of Agriculture if there are any agricultural needs. USDA.gov has information. Department of Treasury has support information and technical assistance. And so does U.S. Department of Commerce Minority Business Development Agency. They provide technical assistance to entrepreneurs through a national network. So when you get the presentation, definitely visit these sites. Okay. How do you get a business loan and how do you improve your chances of getting a business loan? I can't emphasize enough knowing your personal credit. Don't find out what your credit score is at the time of application. There are a lot of free services online where you can get your credit score. Some people like Credit Karma, but the federal website is annualcreditreport.com. It allows you to access each of your credit reports at least once a year, free of charge. You'll log in, it'll ask you a series of challenge questions that only you will know, like, did you have a carload at Ford Motor Group in 2018? Nobody would know that except you. And then once you answer the challenge questions, you can actually look at your reports. Look them over closely to make sure there are nothing that's past due that you're not aware of. Verify that all the accounts are yours. And the most important thing is, if you look at the bottom of your credit report, where the inquiry section is, make sure that anybody requesting your credit information is somebody you authorized. If you see an unknown inquiry, contact the credit report immediately. I've said this multiple times. Separating personal and business finances is critical. Gone are the days when people put everything in a shoebox. You can scan your receipts now. Your mileage may be deductible. Keeping everything separate from business and personal will ultimately make your life a lot easier. Because what will happen is, as your successful business grows, it'll be more and more difficult to reconcile if your finances are commingled. And also building banking relationships. So we're going to advance to the next slide and talk about personal and business credit. Business credit usually is relatively thin. There isn't a lot of information on a business credit report, but when somebody is applying for their first loan, they really want to have a handle on their credit, because that is the most predictive indicator to the bank on how you're going to handle your relationship and how you're going to pay your bills back. If your credit is really some challenges, be ready to explain why. Unfortunately, we see a lot of cases of medical debt in the past, and you may have a good credit score and you may just have a derogatory that was outside of your control, and you can explain that. And the bank can, in some ways, work with you. But it's important to know about it up front. Basically, credit scores are used as a predictability of how you're going to pay your future bills based on your past performance. It also, one of the things that's important with a credit score is, besides extending credit and determining how much credit, it sets the pricing. If you have a lower score, a bank can command a higher interest rate. Whereas if you have a better score, you have the ability to negotiate a better interest rate because of your high score. I mean, in the past, people have heard stories of going to car dealerships where they had a really high interest rate because their credit score was subpar. Whereas if you walk in and you're buying a vehicle and you know your credit is clean because you've already pulled it, you're in a much better negotiating position. So, and if you need help with resources, if you don't have credit or need to build your personal and business credit, go to www.consumerfinance.org and the SBA. They have great tools on how to rebuild business and personal credit, especially if you're starting out. Your business credit, your personal credit is the most important thing. I can't emphasize that enough. And now we're going to get into the 5 C's of credit. What do banks look for? The 5 C's of credit are, this is Banking 101, capacity is the first C. Ability to repay the loan. Based on the amount of money you're borrowing, does your business have the capability to repay the loan. The bank will evaluate your ability to repay based on your net income, your sales. They may look at your personal debt. When banks underwrite, especially for larger loans, they look at what's called the global cash flow. They look at the income from the business, then they look at your personal debts, and they put them together to make sure you have enough to support yourself and your personal side as well as your business and repay the loan. Now, collateral. Collateral comes up a lot because that's the security to repay the loan. If the loan isn't repaid, what is the bank's recourse? In some cases, you may not have enough collateral, and that's where the SBA can come in handy because they can help guarantee a loan with a collateral shortfall. So that's why the SBA is a critical partner to banks in the marketplace. In a lot of cases, if you're looking for less than 50, those loans sometimes can be secured, but they're going to look for a good unsecured and they'll look for a good credit score. If you're borrowing a larger amount of money, say for a large piece of equipment or a building, the building would serve as the collateral for the mortgage, or the equipment would serve as the collateral. For the term loan. So what you want to do when you're talking to your banker about applying, ask about collateral requirements. If it's a small request, can it be done unsecured? And a lot of the scored loans that we talked about, the express loans, those can be done unsecured because they're catering to smaller businesses just getting started. And a lot of times those small unsecured loans will have an SBA guarantee, which is no cost to you. And it gets you the working capital or the permanent working capital that you need. I've said this multiple times through the presentation, credit history. Your credit performance, especially for a newer business, is critical because it's one of the things that banks use to determine, is this a good risk or not? Has this applicant paid their bills on time in the past? If there was an issue, was it due to a specific reason or did they pay slow? I can tell you from past experience, if there's one isolated incident and it's explainable and the score's not bad, sometimes they can work around that. If an applicant has a list of accounts and cards that are constantly past due, they may have an unfavorable credit decision. So manage your credit, make sure it's in order, and always look at your credit reports once a year. I can't have to, and frankly, I would say look at them more like every 1 to 2 months if you can. Conditions, fourth C. Term of the loan in the business environment. Are we in a recession? Or is the economy booming? When we're in a recession, credit can be tighter. Terms of the loan could be, what's the interest rate? Is it interest only or is it principal and interest? How long of a term is it? Is it 5 years, 7 years, 10 years? Maybe the permanent working capital you're looking at, 5 years, the payment would be too large. Ask your bank if you can pay back in 7 to give you a little more breathing room, because cash flow is key when you're operating a business. You may have sales coming in, but you need to have cash available to keep the lights on. And then character, integrity, reputation, references, that ties into credit. For instance, character can be a tough one because everything is automated these days. But say, for instance, there was an applicant that had unfavorable information, maybe criminal record or something, the bank may ask about that. So always, understand the 5 C's that you're going to be looking at: capacity, collateral, credit history, most important, conditions, and character. And ask yourself, how do you rate on each C? And it may need, you have to work with the SBDC or the SBA to get bankable. But also, when you hear about lender matches, I highly encourage you to attend them and meet one-on-one with bankers. It's almost like speed dating. You can meet a lot of bankers and get a feel for where you think you'd be the most comfortable, because there are a lot of options. Here are some of the key points that I'm going to cover quickly, and then we're going to get into fraud. Think about the types of financing you need. I recommend always starting with grants first. Think about what you will need to run your business. Are you applying for the right amount or too much, too little? Understand the payback and the features of different loan products. That's why you want to talk to you want to know what the purpose, your banker will want to know what the purpose of your financing request is, and then they can help guide you. But you also want to know what's the interest rate, what are the fees, what is the turnaround time for this loan? Is it 3 days or 3 weeks? Also, look into FDIC.gov and SBA.gov. You may qualify for government programs depending upon the purpose of the loan, like an agricultural loan or a veterans loan and other characteristics. And then also evaluate the benefits and risks of non-bank financing. One of the things that I've seen in the past is sometimes clients that take credit cards, merchant service providers can also provide almost like a payday loan, but the rates are very, very high. So look at the risks if you're going to a non-bank lender, because you may be able to get the money quickly, but there could be a premium for that. And interest rates can be upwards of like 25, 30%. So really know what you're getting into, and asking questions is really critical before you sign and agree to accept the financing from anywhere. And that all starts with having a trusted advisor and a trusted banker that you can approach and ask questions. Another key point, improving your chances by getting a loan. Credit is critical. Understanding your credit. Strategically develop the 5 C's of credit that we talked about in the last slide. I can say this till I'm blue in the face, and I'll say it again. Maintaining separate personal and business records. That is, when you want to start off on the right foot, having everything organized in one area for your business and then separately for your personal is really important. And I recommend that you have a handle on your credit histories, the 5 C's of credit, and your bank records in order before contacting a lender. And there are a lot of government resources throughout this presentation, which you'll be getting a copy of after the fact. So avoiding fraud and scams, the last section. We are seeing a record amount of fraud and scams, data breaches, hacking, counterfeiting checks, ATM skimmers that capture information. I always recommend some tips. Secure access protocols. Banks and many, not just financial institutions, offer what's called multi-factor authentication. You have to log in, and then it texts you a number. You input that number. That's the second step that can help block a hacker, because they can't bypass multi-factor, and I'm sure there are ways they can get around it. But for the current environment right now, multi-factor authentication is one of your best tools to protect you. Tips to avoid forged checks. Know who you're writing checks to. Most importantly, if you write a lot of checks, it's not a bad idea to talk to your bank about positive pay, where you can go in before the check is paid by the bank every morning by 7 a.m. and decide what you're paying, what you don't recognize. Business debit cards should be secured at all times. They offer very low purchase protection. They're good for ready cash, but use a credit card if you think you're going to need a card more, because they have a little more protection. Protocols on reconciling accounts. The presentation had said you should reconcile monthly. Any business owner should log into their account every morning. As a banker, I look at my account every day. First thing in the morning when I get up, when I'm having coffee, I just take a look, see what came in last night. Do I recognize everything? Yep, I'm good. I had a charge recently that I was able to call my bank and have it reversed. And also they put a block on this company from any further charges coming through. If I had waited a month, who knows how many charges would have come through. So I think it's a best practice to always check your bank balance once a month. It should be predictable. You should know if you have large checks coming through, have they come through? And it also help you identify something that you don't recognize. Another thing that's not listed on this presentation, I highly recommend, once you have your financing in place, there's no reason not to lock your credit reports. If you do not need access to credit services, a credit card, or you actually have already applied for the credit you need, and you don't expect to apply for credit anytime soon, All three credit bureaus, Experian, Equifax, and TransUnion, have apps that you can download, and you can lock and freeze your credit report at any time. Given myself personally, I usually keep my reports frozen if I know what, and if I don't think I'm going to be using credit. Say I want to buy an appliance and I'm taking advantage of a credit card offer, I can unlock the bureau for that transaction and lock it again. But having a handle and being aware, looking at your accounts, managing your credit, knowing what everything contains, there should be no surprises. And if you check in a timely basis, if you check on a timely basis, you can prevent those surprises from snowballing. And also, when you're talking to your banker, ask them about their security policies and their privacy rules and how they share information. All institutions are subject to privacy and information security, but I think it's important to ask your bank about multi-factor authentication, any tips to avoid phishing, fraud, scams. What services do they offer that can protect you and your business? It's better to be proactive than reactive. Now, in closing, here are some of the resources. The FBI, if your business email is compromised, I've seen that happen before. Regular customers email me when they have a quick question, then all of a sudden I'll get an email that says, "Good afternoon, kind sir. I would like you to wire $5,000 to this account," and you know it's fraud. Always, if you get a notification that your business email is hacked, you may want to take steps with either a software scan, like a fraud scan on your system, or contact a vendor that can help you with that, because you don't want unauthorized emails with your signature going out. Always listen to and look at data breaches, a leak or spill of sensitive protected information. In most cases, if your data is compromised, the business that had the data compromised will provide you free credit monitoring services. I think credit monitoring is a great thing. There are a lot of services that are very inexpensive. Experian, I think, charges $9.99 a month. And if there's an application for credit or an inquiry or something happens, you get notified right away. Other ways, account takeover, denial of service, interruption of authorized users' access to their own systems. We're seeing that happens to hospitals. It happens to various types of businesses. So just always have, on your own computer, have good virus protection software. Email account compromise, malware, spyware. You see constant texts, "Hi, how are you?" Never respond, just report and block. Half the time, those are bots just trying to verify if your number's fake, and I get them all the time. Never, ever interact with them, because chances are you're not interacting with a human, you're interacting with a bot. Phishing, spoofing. This is the U.S. Postal Service. We have a package that's held up. Please verify your information. Click this link. Well, guess what? Postal Service doesn't send those texts. They look authentic. Just clicking one link. Always be aware when you get an email or a text, do you know where it's coming from? And do you really have a need to click a link? In most cases, you don't. So really be vigilant, because you don't want somebody taking over your computer, gaining access to your banking information. And then also, ransomware is another, where they hold you ransom until you pay them. So visit the FBI.gov and type in the keyword small business, and you'll be able to get up to date on all the different types of scams, because every time our industry thinks we get a handle on fraudsters and scamming, it happens again. Okay, last slide. Any questions? I haven't seen any